Welcome everyone to Vested Interest. This is Shane back for another portfolio update. This update is going to be coming to you on September 11th. So in remembrance of the towers that fell on September 11th, let's take a moment to say thank you to all the first responders out there, firemen, police officers, nurses, ambulance drivers, medics, doctors. All you guys really appreciate it. No one really wants to see you, but we really appreciate it whenever we need you and you are there. So thank you for all that you do, and for the veterans who may have been involved in the war that followed 9/11 like myself, thank you for your service. Also really appreciate what you do, even though at times it may not be for the reasons that we all think that we were there for. But that's a little too political for this video. Today we are going to cover again the portfolio update. And I'd really like to take a moment also to say thank you to everyone who's commented, watched the videos, liked the videos. Special thank you to those who have subscribed to the channel. Really do appreciate it. Right around 250 subscribers. So really awesome. The channel continues to grow day after day because of people like you. So if you haven't done so already, go ahead and subscribe and hit that notification bell down below so you're notified. And if you are a first responder, fireman, police officer, veteran, anyone that fits in that criteria, let me know down below what's your occupation, how long you've been doing it, and if you've served, where you served at. Really like to know that down below. And we are going to look at tax loss harvesting. Last update or the update before, I sold off a significant portion of my portfolio to help pay for some expenses my wife and I have coming up. And with that, all those sales were in the money, so I was up quite a bit on some of those, 30 to 60% in some. So that means I have hit a taxable event, and my tax advisor, based on my wife and my tax bracket, advised that we do some tax loss harvesting. So I have done that. I will show you that and kind of explain it a little more in that video. And let's just jump right in. I think we've rambled enough here. So we'll start off here on September 6th. We had Johnson & Johnson pay out $45.64 in dividends. Still have the drip paid out, so they automatically went back in and bought 0.27799 shares of Johnson & Johnson. So that's the money in the portfolio creating additional money, and then this snowball will continue to get bigger. Next payout will be larger than the 45.64, even if I don't add anything to it, because it's increased by the 0.27799 shares. LyondellBasell on the 7th paid out $76.67, and that purchased 0.95106 more shares of LyondellBasell. And Johnson & Johnson is in the healthcare sector. LyondellBasell is in the materials sector. Really like both of these. That's ticker J&J for Johnson & Johnson, ticker LYB for LyondellBasell. Almost to a share whenever they pay out, but not quite. The next one will be, again, I plan on adding by the time the next payout rolls around, so it should be over a share, and then I'll continue to add to Johnson & Johnson when it's under my cost basis. I think it's around $165. So two that I really like in my portfolio. And as I said, that's $122.31 the portfolio generated, which went right back into the portfolio. Then on September 8th, this is where we did the tax loss harvesting that we talked about there in the beginning. So as you can see, I sold out of 3M Company, ticker MMM, Intel Corporation, ticker INTC. Verizon, I did not sell out completely. I sold off 46 shares. I still have 100 shares there. Union Pacific, I did not sell out completely either. I'm just trying to hit a number so that it will offset the gains that I had from the other sales. So I still am in Union Pacific. I still am in Verizon. To be honest with you, the reason I picked Intel and 3M is because 3M obviously is having some significant trouble in some lawsuits right now. I'm not sure how that one's going to shake out. So I think this one is going to stay down, even though it's back in the 120s currently. I think I'm going to have an opportunity over the next 3 months to 6 months to buy this at significantly cheaper value as they sort out those and as the market kind of levels out, let's say. Intel, same thing. I don't think the chip crisis is going anywhere anytime soon, so I think I will be able to buy this lower than my previous cost base, which was a little over $45-ish. 3M was around $140. So if I can even get this back in the 120s and this around 34, 35, I would be below my previous cost basis, and I would be fine with that. Now, with tax loss harvesting, whenever you're doing this to offset gains, you cannot buy into, like Intel, for example, or 3M. I cannot buy back into these until after 30 days, or I would lose the ability to write these off on the other gains. So again, did this so that I wouldn't have to pay taxes on the gains that I cashed out. Again, my wife and my tax bracket is around, I think, 32 or 34% right in there. So we are in one of the higher tax brackets. So whenever we have gains, it is significant. That's why I don't really like to sell out of anything in the portfolio. And it would only be the dividends that would be taxable. And I do hold it in a taxable account because eventually I want to use the proceeds from the portfolio to start my own business, to buy some rental property, to buy some land for myself, and then whatever else I want to use it for. Like I said, to start a business, potentially buy a business if that's what I'm going to do, or just continue to utilize it as a business investing into the stock market. Now here, we didn't really add any new funds this week. It didn't make sense to be selling out for tax loss harvesting and to be adding funds additional. So we did take a little bit of the sales from the previous slide, and we reallocated $1,583.91. And with those funds, we bought 25 shares of HP Inc. That's ticker HPQ. This is in the information technology sector. We picked those up for $27.83 per share. We added to our, and this is a new position, we added 25 shares last week. Whirlpool is another new position that we're going to build out. So we added 2 more shares there, ticker WHR. This is consumer discretionary here. We picked those up for $158.38 per share. We added 18 more shares on the pullback. It was below $17. So we added 18 more shares of AT&T. That's ticker T. This is in the communications sector. And then finally, to wrap it all up, we added 10 more shares of Enterprise Product Partners, ticker EPD. And we added those shares for $26.63. So that was really all the activity in the portfolio. Now that we've settled out the portfolio, it should be a steady climb back up, but it did pull us back with the tax loss harvesting. Last week we were in the 90s. Now we were down, and not only that, but the portfolio pulled back a little bit. So we were down to $79,462.47 in total value. So got to climb back up to get over $100,000 portfolio again. Not a huge deal, but we will get there probably over the next few months into next year, I'm assuming. Dividend yield is still pretty high at 4.991, which is what I like with the with the inflation the way it is. Trying to find higher yield in safe stocks is the way to go. Again, that's part of the reason I sold out of 3M. Just other opportunities that are, I would say, a little on the safer side. So not only tax loss harvesting, but deleveraging a little bit of risk out of the portfolio as well. Intel, I'm not as concerned about. They're not facing lawsuits like 3M and unknown amount of funds coming out whenever they do settle those lawsuits. I know they are setting money aside, but it is going to be a big chunk, I'm assuming, whenever they have to start paying those out, whenever that happens. Now, the annual dividend income, this is what the portfolio is all about. As I say, you want to watch this if you are looking for income or building a portfolio for income. That's what my portfolio is about. That's what we do on this channel. I cover my dividend portfolio and the annual dividend income that it's generated, because we are looking for this to continue to grow and eventually be able to use it, like I said, for business, buy property to live off of, to pay our bills if that's what we want. So it is at $3,965.76. Again, this one should start to continue to grow again now that we've sold out of the positions that we want to get out of. Now let's quickly run through the sector allocation. 9.63% communication sector. Consumer discretionary is sitting at 6.67%. Consumer staples is sitting at 6.16%. Energy is at 6.82%. Financials is 16.96% of the portfolio. Healthcare is sitting at 10.98%. Industrials is a little sliver here, that one right there, 0.31. Obviously, the 3M sell was a big chunk out of that particular sector right there. Technology is sitting at 8.14%. Materials at 12.69%. Utilities, nothing there. We sold out of our last utility at a gain there whenever we sold off Next Era Energy. So I am looking to add one here, and as well as build out something else in the industrial sector. And for REITs and real estates, that's our largest pie now, piece of the pie anyway, 21.64%. I don't mind that being the largest piece of the pie. Actually, REITs and real estate in general typically does well over the long run. So, but as we build out, it'll level these back out again. I will add to other positions, and then this pie will look a little better over time. So, not real concerned. That's really the last bit of the update. There's a picture from the other day. You see my dog, let my dog out to go to the restroom. I have 3 dogs actually, so this one of them. That's Odin right there. He is a Shar-Pei Pit Bull Rottweiler mix. He's a pretty big dude there. And as you can see, the sunrise used to be over here. It's crept up through the summer here, and by the end of winter, it'll be all the way back over here. So I think that's pretty cool to kind of see the Earth's tilt and the sun be affected by the Earth's tilt and just kind of slide across the horizon as it rises. You can see as the Earth tilts and changes seasons. It's pretty neat to watch that. So really, that's the end of the update. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit the thumbs up, ring the notification bell, subscribe to the channel, drop a comment down below. Let me know what you think. I do personally read and respond to the comments. I'm always interested to read your questions, suggestions for future topics, opinions, constructive criticism as well. Go ahead and drop it all down below. And guys, if you're looking to do something like the tax loss harvesting or any tax questions, go ahead and make sure you talk to a tax advisor. I am not a tax advisor. I'm not your tax advisor. So make sure you do that if you have any questions around taxes. I go to a professional myself. It's not something I do myself because the laws are always changing and it's hard to keep up with them. Plus, we just have a significant amount of money, portfolios, a couple different portfolios that we have to watch as well. So I have to get some help, some foreign taxes that we're paying it as well, and I don't know how those laws are. So make sure you check with the tax advisor if you have tax questions such as tax loss harvesting, which we covered in this video. With that said, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you in the next one. Thanks for stopping by. And again, my heart goes out to anyone who was impacted by September 11th. Like I said, whether that's being a veteran or having someone there on that day. Really appreciate all the first responders. So thank you so much. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you're not comfortable losing. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.